how Hindenburg shorted the Adani stocks. SPDs are structured products that are tailor-made by foreign brokers for large clients in offshore jurisdictions. These products are not available in India and hide the identity of the trader who takes a position. The Adani saga has taken an interesting turn. A report in the Hindu business line talks of an international bear cartel targeting the company that resulted in a colossal $100 billion fall in market capitalization. The article talks of a planned attack on the Adani Group which was building up since December 2022 and culminated on February 1, 2023. To understand how the entire drama unfolded, we need to first understand how a bucket shop, DABA, operates. The reason for discussing this here will be clear soon. Operations of a bucket shop. A bucket shop is where stock market transactions take place, but these are not reported on the exchanges. All trades are settled in cash and all one needs to trade is margin money. There are no KYC formalities to be done, nor does the profitable trader have to pay taxes. Needless to say, these bucket shops are banned but flourish across the globe and not only in India. When a trader takes a position in the bucket shop, the shop owner takes a counter position in the exchange, especially if it is a big position and taken by a strong trader. Suppose a trader XYZ buys 1,000 lots of Nifty in the bucket shop. The shop owner generally does the opposite end of the transaction. In this case, the shop owner will sell 1,000 lots of Nifty to trader XYZ. But now he is exposed to the market risk and may stand to lose a chunk of money if the market moves higher, so the shop owner will take a counter position in the market by actually buying 1,000 lots in the exchange. Here the earning for the shop owner is the big brokerage that he earns in the deal. In the case of the Adani Group a similar transaction took place but through a structured product in the international market called the Structured Product Derivatives, SPDs, a term that will be much in the news in the future. SPDs. SPDs are structured products that are tailor-made by foreign brokers for large clients in offshore jurisdictions. These products are not available in India and hide the identity of the trader who takes a position. Multiple instruments are at play here. Suppose a trader ABC residing abroad wants to short sell a stock in India, he will approach a friendly broker who will allow him to buy a put option on the stock. A put option allows him to place a bet for a premium that the stock will fall. Just like the bucket shop owner, there is no counterparty in the transaction but the broker. Now the broker is the seller of a put option, which means he will make money if the stock rises and lose money if it falls.
The broker, like our bucket shop owner, would like to cover his risk and runs to the Indian markets to do so either by buying put options, selling call options, or shorting futures. In the case of Adani, huge short positions were created well before the Hindenburg report was out. Before looking at the details of the positions, let's look at what gave away the game for Indian agencies to probe into the entire transaction. The clue. On January 24, Hindenburg, the day the company released its report, said that it held short positions in Adani companies through bonds and non-Indian traded derivative instruments. The words non-Indian traded derivative instruments gave a hint of the nature of the move. It suggested that New York-based Hindenburg had created a derivative position in markets other than India. Hindenburg's position was created in a jurisdiction that allows such positions to be taken. The transaction was through the SPD instrument. Details of the broker who sold the puts are not yet revealed. Modus operandi. The broker who sold the SPD had to take a position in the Indian market. Since the shorting was in an illiquid and closely held stock like Adani, the short selling had to be spaced out over time. The short sellers were so confident of their action that they not only shorted Adani's stocks but also the entire Indian market by short selling the indices. Short selling positions were being created from December 2022 onwards. The report says that as a result of short selling by buying put options, the closely watched put-call ratio became skewed. Traders betting that the stock in the market would fall touched a 13-year high as compared to those betting that the market was going to rise. Hindenburg released their report on January 24, 2023, a day after the PCR touched a 13-year high at 0.73. Even in March 2008, the peak of the financial meltdown, the PCR was 0.75. Interestingly, the PCR of January 24 was created at a time when the market was not even in a bearish phase as compared to that in March 2008, suggesting that the short sellers were well aware of an imminent fall. Even on the budget day when the market was rallying, short sellers continued to hold on to their position. The probe also revealed that sizable positions were created in out-of-the-money (OTM) put options of Adani Group stocks, indicating that someone was expecting a huge fall in these counters. The trigger. Hindenburg published its report on January 24, but there was no repercussion on the Adani Group stocks on that day or the next. They fell on January 27 but recovered some lost ground in the run-up to the budget. On Budget Day, while the finance minister was making her speech in the parliament, there was a news flash of Credit Suisse's decision to stop accepting Adani Group's bonds as collateral. After this news, all hell broke loose and we saw the market led by Adani stocks crashing. The Indian connection. The Business Line article says that Hindenburg is not a registered research firm with any market regulator. The report it has published is similar to reports by a leading Indian market researcher and is bespoke reports on listed companies that were sold for $20,000 to $50,000 to private clients. Hindenburg had claimed that it prepared its report based on SEBI investigations into Adani stocks via the Right to Information (RTI) application. But SEBI never shares any investigation-related info via RTI. That's another angle that investigating agencies will start probing.